Good morning, everyone. Welcome to Pre-Market News and Views by InTheMoneyStocks. Today is December 17, 2015. My name is Nick Santiago. Thank you all for tuning in today. All right, so yesterday we had a pretty big rally after the Federal Reserve raised interest rates by a quarter point. That just goes to show you that the market had baked in the rate hike, and they also really liked what Janet Yellen said in her press conference, as she said she would be very, very accommodative and remain very, very dovish for the foreseeable future. So again, markets like the reaction, markets like the statement by the reaction that we see in the tape, and today we are seeing futures trading higher by about 5 points right now to 2077 per contract. So we'll see where this market goes. Again, it's been a really, really robust week for the market. This is also options expiration, so again, take it with a grain of salt. You had a Fed announcement, and then you have quadruple witching options expiration tomorrow. So a lot of times you're going to see markets that are down move up during options X and vice versa, and I think that could be part of the equation in this current rally. But either way, there are a lot of stocks in the news. Let's go to the first one here on the charts is Federal Express, and what you're going to see here is FedEx is trading sharply higher right now at $157.45. The stock did close at $148.83. I'm going to have some gap levels in the chat room for this one at 9 a.m. So again, if you want to come over and trade this alongside of us, take that 7-day free trial to the intraday stock chat. Another good day yesterday, and we're going to look to keep that going today. And it's been a stellar 2015 in the intraday stock chat. All right, let's take a look at its cousin here, UPS. Every time FedEx makes a move, UPS will usually move in sympathy. You are seeing that with UPS. Stock closed at $100.51 yesterday. It is trading at around 102.70. I am seeing a ton of resistance for UPS today at around 105.90. 105.90. There is also short-term resistance at around 103.25, but we've already hit that level this morning. So the next big level that I'm seeing for resistance is 105.90. Keep that on the radar. That could be a fade level. Okay, let's go to Oracle. They reported earnings. The stock right now is trading at $38.50. Closed at $38.91. I'm not seeing anything great or terrific here. Oracle is basically just slightly lower than where it closed yesterday. I don't really see any levels here for Oracle that really interest me, but nonetheless, we'll see how it plays out once the opening bell rings. Stock does have a ton of resistance around 41.60 and more at 42.50. If it does trade up that high, I'm not even sure we're going to see that. But again, if it got up to around 42.50, I would consider a potential short play in the name. All right, let's take a look at ECN. This is Accenture, and you're going to see this stock is trading a little bit lower today. It closed at 109.08. Right now, it is trading at 107.57, so it is down a couple bucks from yesterday's close. The stock does have support around 103.60. If it does get there, that'd be the only level that might interest me. Other than that, we're going to leave it alone, but we will be looking at this one once the opening bell rings. Let's take a look at General Mills. Looks like they reported earnings as well. Stock closed at $59.19. It is now trading at $57.63. I'm going to have some gap levels for this one if it does come lower. I don't know if it'll go a lot lower from here because this is a little bit of a support level around 57. But if it can break through there, I have some good solid gap levels for a play, and they will be posted up in the intraday stock chat room right at 9 a.m. Let's take a look at Pandora Media, which is the little radio service here. You're going to see that the stock right now is trading at $16.02, closed at $13.44. This is a great pop for Pandora. I am seeing some resistance at around $16.75 if it does get up there. If it gets through there, then you got a big gap fill on the chart that traders should watch for, and that's going to be around $19.30. So again, really the big level for Pandora to get through right now is $16.70. If you own it, trail the stop loss immediately, just in case that level does cause the stock to move back down. But that's all I'm seeing right now. Let's take a look at KBIO. Normally, I don't even mention these kind of stocks, but I did put a warning video out a while ago, and I said anything that goes up in this kind of fashion is going to come down just as hard. And you could look at our YouTube channel or go back and look at our archives on our Rant and Rave blog. And it was just a warning sign. These things are not sustainable. You're going to see this thing going from $23 and change all the way down to 11 bucks. Looks like the CEO was arrested. I don't know the story there. I don't know what's going on, but I will say this. Anytime you see a micro cap go from 45 cents to 40, run for the hills, because that is not sustainable. That will come back down to reality, and sure enough, it is crashing and burning today. All right, let's take a look here at the next one. Here is Polaris Industries. I'm going to give this level out what I think is a good level. It's going to be around $83.25. It gets down to $83.25. It's a hard play because this stock does not always trade 1 million shares a day or more. Some days it trades 300,000, 400,000. So levels on this stock can overshoot. Right now it has rebounded up back to $87.50. Closed at $95.29 yesterday. So this thing is definitely getting hammered. But the only level I like is 83 and a quarter. That's the only level I'm seeing for the stock. All right, let's take a look here at Pier 1 Imports. PIR is the ticker symbol here. Stock closed at $5.95. Wow, traded below 460. Now it's trading at 490. There's no play on this whatsoever for me with Pier 1. I'm just going to leave this one alone. Looking at the chart here, it's a broken name right now. So again, we'll see how it plays out. But I really don't know what it's going to do down here. Be very, very careful with this name. If I see something new, I will point it out in the inside the intraday stock chat room, but right now I'm not seeing anything that is standing out to me. All right, the gold market today getting hit a little bit. Gold is down $17 today. Yesterday gold was up sharply. Today it's down 17. So if you take a look at the GLD this morning, that is trading at 101.46. Anytime the Federal Reserve makes an announcement, gold will be volatile. Yesterday gold caught a really nice bid, but today it is coming right back down to yesterday's lows and even a little bit lower. So again, gold under pressure, gold mining stocks under pressure. All metals and mining stocks are under pressure today, and you could see the reason why. The US dollar, just look at this move here. Big pop today in the dollar. Dollar is up in a big way, and again, when the dollar moves higher, precious metals, gold, anything commodity related usually moves lower. We are seeing a little bit of a divergence there with oil. Oil futures are trading up $1.14 to $36.67. Despite the strong dollar, oil is moving up. So we want to take note of that. Let's take a look at the USO, which is an oil ETF. And you're going to see that this morning is trading at, I believe, $10.93. Closed at $10.99. So this has already reflected that move, so don't put too much into it today, but we'll see where oil trades out. Right now it is trading a little bit higher despite the stronger dollar. Generally the stronger dollar will put pressure on oil, but that is not the case today. So we'll see how this all plays out. Once again, if you want to come over and trade alongside of us, take that 7-day free trial to the intraday stock chat. You'll see everything that we're going to do there. We have a couple of gap plays out here this morning, and again, we will look to execute more trades once the opening bell rings. With that being said, everybody, have a great trading day, and we will see you on the charts.